Welcome to this video on the Mineral Exploration and Development Cycle, presented by Talon Resources and Community Development, Inc. This presentation introduces the mineral exploration and extraction industries across Ontario, Quebec, and Manitoba, three of Canada's leading mining regions. It provides a broad overview of how the modern mining cycle operates, guiding the audience through each stage from early prospecting and exploration to development, production, and reclamation. The discussion is designed for a wide audience and explores deposit types, operating methods, financial markets, regulatory frameworks, and the evolving business environment that shapes the industry. Throughout the presentation, mining is examined through the lens of sustainability, transparency, responsible governance, and strong Indigenous partnerships, which are increasingly central to project success. As global demand for critical minerals grows to support climate transition and electrification, mining in these provinces continues to evolve through technological innovation, environmental responsibility, and meaningful collaboration with communities. Understanding this full cycle provides insight into how resource development contributes to economic growth while balancing social and environmental stewardship. The modern mining cycle includes 5 stages: prospecting, exploration, development and permitting, mining, and reclamation. Financing is a crucial aspect throughout the entire process. The valuation lifecycle of a junior mining company shows how share price often moves ahead of actual mine development. In early exploration, valuation is low due to high geological risk. As discoveries are made and anticipation builds, share prices can rise quickly, sometimes reaching a period of euphoria, where excitement drives valuations higher than the project's current fundamentals. This is often the ideal financing window for companies to raise capital. As reality sets in, attention shifts to permitting, engineering, and construction, and share prices may decline as financial and execution risks become clearer. If the project successfully advances into production, valuation can grow again based on operational performance and cash flow. The key takeaway is that timing and volatility play a major role in junior mining, with valuation driven by discovery, sentiment, and long development timelines. Prospecting is the first step in the mining cycle, where individuals or small teams search for signs of mineralization using modern tools such as drones, satellite imagery, and geophysical surveys. Today, most discoveries are hidden beneath the surface, making technical knowledge and data analysis essential. Basic permits or a prospecting license are required, along with practical field experience and an understanding of geology and claim staking. Prospecting creates early economic activity through staking, mapping, and sampling, while also supporting local and northern economies through fuel, transportation, and hospitality services. Exploration, testing the ground, involves junior companies taking on the highest discovery risk, while senior companies focus on advancing and developing projects that have already demonstrated potential. Early activity includes land acquisition through staking or option agreements, early consultation with local and Indigenous communities, environmental screening, geophysical surveys, sampling, and initial drilling programs to confirm whether a target has meaningful potential. At this stage, the goal is simple: determine if there is something valuable in the ground worth pursuing further. Advanced exploration defines the deposit through continued consultation, permitting, and more intensive diamond drilling programs that systematically outline the size, grade, and continuity of the mineralization. Companies must follow strict public reporting standards such as NI 43-101, raise capital through public markets, and provide transparent technical disclosure. The outcome of this stage determines whether the deposit is economically viable and builds the technical and financial foundation required for mine planning and future development. The economy of exploration involves typical spending ranges from $500,000 to $50 million per project, depending on scale and complexity. This spending creates both direct and indirect economic impacts, supporting drilling contractors, assay labs, geologists, engineers, environmental consultants, and community engagement professionals. Indirectly, it supports hospitality, fuel suppliers, transportation companies, and local service providers, strengthening northern and rural economies even before a mine is constructed. Canada's total exploration and deposit appraisal spending reached $4.05 billion in 2024, reflecting the strength of the sector nationally. Ontario leads in exploration investment. Quebec continues to grow rapidly with critical minerals such as lithium and nickel, and Manitoba shows promise in copper and base metals. Together, these provinces form Canada's exploration core, supported by geological potential, infrastructure, investor confidence, and collaboration with Indigenous communities. The development and permitting stage transitions a discovery into a designed and engineered project, moving from proving the resource to determining how it can be mined safely and profitably. This phase includes continuous drilling to refine resource estimates, pre-feasibility and feasibility studies to assess technical and economic viability, detailed mine planning, cost modeling, environmental studies, and regulatory approvals. Transparent public reporting and regulatory compliance are critical, as investors and governments rely on accurate data to support informed decision-making. The economy of development expands significantly as projects move closer to construction, increasing demand for engineers, technical specialists, environmental professionals, construction crews, tradespeople, and community relations teams. Capital spending rises into the tens or hundreds of millions of dollars, supporting logistics, material supply, workforce accommodations, and long-term service contracts. This stage deepens regional economic activity and creates sustained employment opportunities before production even begins. Mining, the production phase, represents full-scale operations where significant upfront capital investment, often ranging from $100 million to several billion dollars, has already been committed. Operations focus on extracting and processing ore efficiently, while maintaining strict environmental, health, and safety standards. Financial performance is influenced by global commodity prices, and successful mines aim to recover capital costs while generating long-term profitability. Reclamation closes the loop in the mining cycle by restoring the land once resources are depleted or the project is no longer viable. This stage involves site cleanup, demolition, contouring, replanting vegetation, water treatment, and long-term environmental monitoring to ensure ecosystems are restored and future land use is supported. Companies must maintain approved closure plans and provide financial assurance to guarantee funds are available for full reclamation and environmental responsibility. Mining projects require massive capital investment that goes far beyond what individuals or most single private companies can finance on their own. Exploration can range from $500,000 to $50 million. Depending on scope, development can require $5 million to $250 million for engineering and permitting, and mine construction often ranges from $100 million to $5 billion. Because of geological uncertainty, technical complexity, market volatility, and long timelines, the mining sector is inherently high risk, meaning investors face the potential for both substantial returns and significant losses. This risk-reward structure attracts capital precisely because successful discoveries and operations can generate strong long-term value, although profitability ultimately fluctuates with global commodity demand, pricing, and operational performance. The public company model allows mining projects to move forward by spreading financial risk across a broad base of investors, rather than relying on a single funding source. Through public markets, both retail investors and institutional investors can participate, contributing capital, while sharing exposure to the project's risks and potential rewards. This structure provides liquidity, meaning investors can buy or sell shares without waiting for the mine to be built or completed, which makes capital formation more flexible. It also encourages transparency, regulatory oversight, accountability, and disciplined reporting standards, creating a structured environment where large-scale resource projects can raise the funding necessary to advance from exploration through production. The future of mining in 2025 and beyond is defined by evolution across the entire mining cycle, from exploration to reclamation, with technology, environmental responsibility, and community partnership at its core. Modern projects are no longer judged solely on resource size or profitability, but on how responsibly they are developed and how well they integrate environmental, social, and governance (ESG) principles into decision-making. First Nations communities are central to the future of resource development, ensuring that projects are built on respect, collaboration, shared benefit, and long-term relationship building. Strong partnerships improve certainty, strengthen permitting processes, and create sustainable economic opportunities for communities and regions alike. As the industry moves forward, transparency, innovation, and inclusion are essential to balancing economic growth with cultural respect and environmental stewardship. Mining in Ontario, Quebec, and Manitoba thrives when partnerships are genuine, responsibilities are shared, and communities are empowered. The path ahead is not just about extracting minerals, but about building a responsible and collaborative resource sector that benefits present and future generations. Thank you for watching this video. We hope you found this overview of the mineral exploration and development cycle informative. If you're advancing a project and want to build certainty through disciplined, strategic First Nations engagement, connect with us at Talon. Our team brings over 30+ years of experience supporting proponents and communities across Canada, helping structure alignment early, reduce risk, and move projects forward with confidence.